I am long Capri, which is Michael Kors and Jimmy Choo and Versace. They always say if you go home long, it's the same as if you bought it right at the close. So I guess you could say I am a buyer. Unfortunately for them, they have Hong Kong exposure. They have Asia exposure. The other thing, which is really unfortunate for them, to improve their supply chain, last year, they moved a lot of their manufacturing to Italy, which is probably not ideal at the moment. But I think ultimately that will pass. I think they have a big buyback. I wouldn't be surprised if they were out there buying stock. But, trade's terrible. It's been a painful one.
Some of those are broken companies. And this is not the environment I think you go digging and dumpster diving. We were talking about dumpster diving when the market was at all-time highs and you were looking for places where people were looking for underperformers. Kohl's, I think, has an environment here where the stock has been extremely volatile. They're in a very competitive space where they're essentially competing on food prices with Walmart in a world that's overstored. So, again, I think of all the places where I think you've seen a sell-off related to this gets back to the core of true fundamentals. And I think with some of those names, those are not fundamentals independent of Cramer.
You really gave me the dog today because this is the dog of the entire market. And the fact is that the fundamentals for this entire sector are not great. Throw in a touch of coronavirus and you are talking about China falling and their demand falling. They are the single largest importer of oil and the third largest importer of energy, usable consumer of energy around the world, right? So that's bad. IEA lowering their demand. So you have to think about whether or not you even want to own this sector. We don't love this sector. If you have to be in this sector, the most defensive name is actually probably Exxon.
It's interesting. Now, ExxonMobil, I get the 7% dividend. Their dividend's increasing for the wrong reasons, as we all understand that. And you can give up 7% in a day. So I'm with Tim on that one. And you haven't seen the flush yet. And forgetting about everything we talked about, the three letters we didn't mention is ESG is a huge existential risk, and we've talked about that. But Schlumberger, if you're looking for a trade, and we talked about this in the fall, $30 was a huge double bottom. We said it's going to rally from there. It rallied basically 30% in a couple weeks. Now it's back below that. How do you trade that stock? A close above 30, you buy SLB again. It closed at 28.40 today.
Autos coming into all of this externality were really in a difficult place. And they're in a difficult place because of trade dynamics. There's certainly some secular issues going on in the sector. GM is a name I'm long. It's a name that's done nothing for 5 years. It's a name that down near 31, it's at the bottom of a 5-year range. It's a company with a great balance sheet. So if we're anywhere near getting a slower economy moving into a credit, that might be the next move for a lot of companies. I think Ford is one you got to be careful about. GM is not. Moody's was out today saying auto production globally is going to be down about 2.5% this year. Some of that's a function of Corona. Everything we've heard from people like VW is talk about supply chain in tech, supply chain in auto. This is a big deal.
Yes.
So look at the underperformance here. This is an opportunity. Maybe it's not tomorrow, but I do like GM here.
So I understand Xilinx has had a huge move to the downside. It started moving long before this whole coronavirus thing. So maybe it gets interesting around this $85 level or so. But Twitter to me is the one that sticks out as we go into this election cycle. Yeah, I understand it's been a volatile stock, but here at $35, I think out of the names you just mentioned, TWTR is the most interesting.